Welcome back to another TDI Premium Deep Dive. In today's episode, we'll be diving into a duopoly in the online travel agency world. From a small Dutch startup to becoming the largest player in the industry. This is a deep dive into the machine, Booking Holdings. Enjoy. The global online travel market is defined not by the most visible brands or the most aesthetically pleasing interfaces, but by the efficiency of the underlying systems that connect global supply with fragmented demand. At the apex of this industry is Booking Holdings, a multinational that has evolved from a Dutch startup into what is arguably the most efficient profit-generating machine in the history of travel. While competitors like Airbnb or Ctrip or Trip.com capture the cultural imagination and giants like Google control the gateways of discovery, Booking Holdings has built a very strong moat predicated on performance marketing, conversion optimization, and a massive self-reinforcing network effect. This is a company that processes over 1 billion room nights annually and holds a dominant 60% market share in the European travel sector. Now we have to start in Amsterdam. The story of Booking Holdings begins with a radical departure from traditional European startup culture. Founded in 1996 in Amsterdam by Geert-Jan Bruinsma, the original entity, Booking.com, was built upon a simple yet revolutionary premise. Hotel reservations should be binding and bookable online through one single unified platform. In an era where the internet was still in its infancy, this required a level of operational pragmatism that remains a hallmark of the company today. The early technical infrastructure of the organization was famously described as being held together with digital spit and glue. Utilizing faxes and manual scripts to bridge the gap between the primitive web pages and hotel reception desks. Now, unlike the American counterparts, which often pursued growth through aggressive venture capital funding, Booking.com developed a culture of extreme frugality and cautious profitability. This deeply Dutch approach to business meant that growth was financed through the internal cash flow, rather than debt or outside equity. Now, the most important moment in the company's history occurred in 2005, when the American firm Priceline.com acquired Booking.com for only $135 million. At the time, Priceline was known primarily for its name-your-own-price model. But the acquisition allowed it to change towards a high-volume, commission-based model that Booking.com has now perfected. By 2018, the parent company was renamed to Booking Holdings to reflect the reality that Booking.com had become its most vital business unit, accounting for almost 90% of all revenue. The holding company structure now manages a portfolio of market leaders across several niches, basically creating a multi-vertical travel ecosystem. For example, obviously Booking.com, which is global, the heart of the group, but also Priceline, which focuses mostly on North America, Agoda, which focuses mostly on Asia Pacific, Rentalcars.com, which operates globally, Kayak, which operates globally, and OpenTable, which is mostly for restaurant reservations, diversifying into local experiences. This diversification allows the holding company to capture different segments of the traveler's journey, from initial discovery on Kayak to the final restaurant reservation on OpenTable, all while using the massive backend inventory of the core accommodation platforms. Now, the competitive advantage of Booking Holdings is often internalized as the machine, a term that signifies a systematic, data-driven approach to every aspect of the user experience. Booking.com does not attempt to change the world or create a lifestyle brand. It focuses only on booking hotel rooms better than any other entity. This focus is manifest in three specific areas: inventory depth, conversion optimization through lots of A/B testing, and performance marketing scale. The core strength of the platform is a massive global network effect. The platform has over 3.3 million properties, and this inventory is balanced with close to 500,000 traditional hotels and motels and over 3 million alternative accommodations such as villas and apartments. And while Airbnb reports more active listings, Booking.com often rents out more individual rooms because its listings typically include traditional hotels with dozens or hundreds of rooms, whereas Airbnb focuses on individual residences. For property owners, the value proposition of the platform is existential. Many independent hotels suffer from low occupancy rates, frequently as low as 30%, while their fixed costs remain constant. Online travel agencies, short for OTAs, provide the necessary demand to fill these rooms. But this relationship is also characterized as a frenemy dynamic, because while OTAs provide the marketing arm that small hotels cannot afford, they also extract commissions ranging from 15 to 30% and historically enforced price parity clauses that prevented hotels from offering lower prices on their own websites. The next part is A/B testing. While competitors like Airbnb invest in high-end design and emotional branding almost, Booking Holdings invests in the science of conversion. The platform is the result of millions of incremental experiments aimed at maximizing the profitability that a visitor will complete a booking. Early in its history, the team discovered that only 1 in 10 experiments yielded a positive result, but those that did were instantly implemented across the platform. A good example of this A/B testing is the implementation of scarcity queues. Phrases like, "only a few rooms left," or 15 people are looking at this property, were proven through data to increase conversion rates, even if they were criticized by some for being unrefined in terms of design. This culture of testing ensures that the user interface is optimized for actual human behavior, rather than aesthetic trends. And you can test this out yourself, because comparing Airbnb to the booking website is like looking at a 1990s platform and a high-end design platform for Airbnb. The difference is quite striking. But the technical edge is difficult to replicate because it requires massive volume of traffic to achieve statistical significance, a volume that only an entity of booking scale can basically generate. The next weapon is marketing. Booking Holdings is one of the world's most sophisticated practitioners of performance marketing. In 2024, for example, the company invested over $7 billion in marketing, accounting for 31% of their revenue. This spend is primarily focused on search engine marketing, SEM, through Google AdWords, and by creating millions of highly targeted landing pages and bidding aggressively on long-tail search terms, the company turns advertising into a repeatable money multiplier, where every unit of currency invested generates a pretty predictable return in booking commissions. And this creates a virtuous cycle. Higher conversion rates from A/B testing allows the company to bid more on the keywords than its competitors, which drives more traffic, which in turn provides more data for further conversion optimization. The company's head of marketing and the former Google executive has said that for the infrequent purchase behavior associated with travel, search engines are the one door through which the new customer enters the ecosystem. Booking Holdings is characterized by a high-margin, capital-light model. It has shown to be remarkably resilient across economic cycles. The company's revenue growth stabilized 12 to 15% pre-pandemic, exploded during the recovery phase to 61% in 2021, but has since then begun to normalize again towards historical averages. And there is a significant shift towards a merchant model, which increasingly supplements the traditional agency model. Now, the difference between an agency and a merchant model is this. For example, the agency model is different on payment collection, revenue timing, working capital, and cross-selling. For payment collection, the hotel collects from a guest at check-in. When looking at revenue timing, commission is paid post-checkout. The merchant model is a little different. Booking collects revenue from the guests at checkout. Booking then pays the hotel post-check-in. This results in a high float, where Booking Holding holds the money up front. And this allows them for easier cross-selling, part of the connected trip. And the merchant model has become a primary growth driver. And the transition to this model is not merely a change in accounting, but is a fundamental change to becoming a fintech-enabled travel provider. Because by acting as the merchant of record, Booking Holdings can earn interest on the massive float of customers' funds held between booking and stay. This model also allows the company to capture foreign exchange spreads and provide virtual credit cards to hotels, which often generate additional rebates for the platform. When you look at the financials, you'll see a consistent disparity between net income and free cash flow. This is a testament to the power of the merchant model, because it allows for deferred payments. Because Booking retains customer payments until the service is completed, it operates with a highly favorable working capital cycle that provides ample liquidity for its aggressive capital allocation strategy. Let's talk about that for a second. The management of Booking has established a reputation for being exceptionally disciplined and frugal in its approach to capital deployment. With capital expenditures structurally low, less than 2% of revenue, the vast majority is available to reinvestment or shareholder returns. For example, in 2023, the company deployed over $10 billion into share repurchases. This is part of their strategy to reduce the number of outstanding shares and boost EPS. And while Booking Holdings has historically used acquisitions to expand its footprint, like Agoda or rentalcars.com or even OpenTable, the regulatory climate has restricted this path. In 2023, European Commission blocked Booking's planned $1.7 billion acquisition of Flugo Group, a flight booking provider. And this intervention shows us that the company may struggle to grow through major acquisitions in the future, which forces a greater focus on organic development. So let's talk about the competitive advantage. The landscape of online travel is undergoing a structural realignment, with Booking Holdings finding itself positioned between traditional OTAs, lifestyle platforms, and the rise of direct booking tools. Now, the first is obviously the duel with Airbnb. Airbnb remains the most significant long-term competitor to Booking Holdings, but the two companies operate with different philosophies. Booking is optimized for the value-flexible traveler and the business professional who wants reliability, ease of payment, and lots of hotel options. While Airbnb is more optimized for the experience seeker and the traveler who values uniqueness and design. A recent trend suggests a convergence of these models. Airbnb's 2025 releases indicate it is adopting the Booking.com playbook by easing cancellation policies and increasingly adding hotels to the platform. Conversely, Booking.com has mastered the operational plumbing of short-term rentals, offering managers faster, more reliable payouts and a multi-vertical ecosystem that Airbnb does not have. And while Airbnb holds the brand as a loyalty program advantage, Booking's Genius program provides a real transactional loyalty that drives more predictable booking flows across seasons. Especially in North America, have gained power through massive loyalty programs as well. Hilton, which has over 180 million members, or Marriott, which has over 200 million members, now use these programs to offer discounts for direct bookings, undercutting the prices found on, for example, Airbnb or Booking. A practical study of New York and Barcelona revealed that Hilton was always cheaper when booked through its own website, which is a real danger if they bypass the OTAs. For smaller independent hotels, however, the direct booking battle is much harder to win, because the marketing spend gap between hotels and OTAs has reached unprecedented levels. Booking leads, obviously, with over $7 billion in spend, but the global industry's collective marketing spend is only a fraction of that amount. And the disparity ensures that most independent properties remain dependent on Booking Holdings for visibility. Now, the most significant immediate risk to Booking Holdings is not a competitor, but a regulatory shift in its most important market, Europe. As the world's largest online travel agency with a 60% market share in Europe, the company has attracted the scrutiny of the European Commission. In May 2024, Booking Holdings was designated as a gatekeeper under the EU's Digital Markets Act, which forced fundamental changes in how Booking operates. Now, the price parity clauses, which previously prevented hotels from offering better rates on their own websites, are now prohibited through the EEA. Furthermore, Booking is now banned from taking punitive actions, such as increasing commission rates or delisting properties against hotels that offer lower prices on their own websites. And while these changes theoretically weaken Booking's competitive advantage, the company has countered by focusing on its superior conversion rates and data transparency. Beyond regulation, the rise of artificial intelligence is another major shift in how travel is discovered and booked. Because Booking Holdings is built by controlling what travelers see on their screens, and that control is now fragmenting across a dozen of AI platforms. In 2024 and 2025, the travel discovery journey began to migrate away from traditional search engines towards AI assistants. OpenAI's launch of Operator, an agent capable of browsing the web and completing bookings autonomously, illustrates this change. Booking.com and Priceline were launch partners for this initiative, but the move carries a hidden danger. When a traveler asks an AI assistant to find a hotel, the selection criteria happen inside the model's neural network rather than on Bookings.com's interface. As traffic changes across ChatGPT, Gemini, Copilot, and Apple's Siri embedded agents, Booking.com transitions from selling placement to hotels to buying placement within these models. While management has said they are excited about the potential of AI to enhance the connected trip and streamline operations, they must balance this risk and opportunity carefully. Now, obviously, they aren't sitting still. They are countering this discovery risk by embedding itself more deeply into the platforms travelers already use. Adyen for platforms and similar embedded finance models have become a metaphor for Booking's own expansion. And by allowing other platforms like Uber, Wix, or even local marketplaces to use Booking's inventory through a specialized fintech-driven product, the company can capture volume, even if the traveler never sits on its core site. Now let's briefly touch on management. The CEO of Booking Holdings is Glenn Vogel, which is widely regarded as some of the most capable people in the digital OTA service sector. They are quite low profile for such a large company, which focuses mostly on capital allocation and management oversight instead of being in the public eye. Since taking the helm in 2017, Glenn Vogel has moved the company through the existential crisis of the pandemic, but also the recovery. Described as the most frugal CEO ever, Vogel's interaction with employees has often been focused on addressing cultural complacency and steering the organization towards new ventures, like the in-house payment system. And his background as an investment banker is shown in the company's aggressive buyback program and its focus on operational excellence. The incentives at Booking are heavily aligned with shareholder returns. Rewards are based on increasing revenue and EBITDA, while issuing as few shares as possible. The company's SBC as percentage of revenue is notably lower than that of the competitors like Airbnb or even fintechs like Adyen, which shows a high degree of respect for the equity holders. Would rate Booking Holdings as a quality compounder, a company that generates high returns on capital and can reinvest that capital effectively over long periods of time. Booking Holdings operates a highly scalable business where each additional dollar of revenue flows through the bottom line with minimal incremental cost. Net revenue per employee remains amongst the highest in the sector. Gross margins are close to 90%, with free cash flow margins over 33%. Return on capital employed is over 44%, while capex to revenue is under 2%, which is very capital light, which minimizes reinvestment risk. They also hold over $17 billion in cash, which allows them to pay back debt very easily. They now trade at a 7% free cash flow yield, which makes the company quite attractively valued, especially considering historical valuations. I'd like to touch the connected trip one more time, because the connected trip is the company's primary vehicle for expanding its share of the travel market. By integrating airline tickets, car rentals, or even museum visits into a single transaction, Booking Holdings can increase its total take rate and improve the user experience. Car rental services, primarily through rentalcars.com, already provide online rentals in over 52,000 locations worldwide. Historical data shows that rentalcars.com had a net margin of approximately 6% in the past. With full integration into the Booking ecosystem, operational leverage, this could push the margin towards 10%. The experiences market represents an even larger untapped opportunity. While the market for experiences, museums and attractions, is smaller than for lodging, the profit margins are comparable to hotel commissions. And if Booking can successfully cross-sell these services to massive pools of accommodation bookers, this could significantly enhance its lifetime customer value. Now, predicting the future of Booking Holdings requires an understanding of its cyclical nature, because the industry is sensitive to global economic conditions and the potential for new outbreaks or travel bans. But to give you an idea of how Booking Holdings is valued, if you assume the company can grow its revenue for 15% for the next 5 years, maintain a profit margin of 22%, and an exit multiple of 25, you could expect a 17% CAGR return from here, excluding dividends and buybacks. Now, if we lower the assumptions to 8% CAGR growth for the next 5 years and an exit multiple of 20, you can expect a 5% CAGR return the coming years, excluding dividends and buybacks. Now let's wrap up this Booking Holdings deep dive with a quick summary. Booking Holdings stands as the example of how a singular focus on operational efficiency and A/B testing can create such a strong company. By mastering the machine, a technical and cultural infrastructure predicated on conversion optimization and massive performance marketing, Booking has secured an almost unsaleable position in the OTA market. The transition to the merchant model and the pursuit of the connected trip is a big tailwind. It aims to be the comprehensive travel partner and fintech facilitator. The capital allocation strategy, which is defined by massive share buybacks and a new dividend, demonstrates a high degree of alignment with long-term shareholders. We also like the fact that the CEO is known as the most frugal CEO in the world. However, the company is facing a threat of regulatory constraint and technological fragmentation. Definitely something to keep in mind. If the rise of agentic AI discovery threatens to avoid and disintermediate Booking, the very interface they built for the last 2 decades is basically worthless. Now for you, me, and investors, the fundamental question is whether the machine can adapt to the world where discovery is managed by neural networks and pricing is dictated by regulators. If Booking can successfully use its massive supply-side relationships and the fintech infrastructure to become a backend for these new AI discovery agents, they can keep compounding for a long time. If, however, the shift to AI leads to fragmentation of traffic and the loss of pricing power, even the most efficient machine will struggle to maintain its historical growth rate. Ultimately, Booking Holdings is a high-quality company and remains a bet on the human desire for travel, backed by a culture that measures everything and assumes nothing. I hope you enjoyed this TDI deep dive into Booking Holdings, and we'll see you in the next one.